For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Big day on Monday, day one. Today we're talking about timings. Received an email yesterday from a trader who's obviously new to the channel. He said, that's great in hindsight, but let's see you do it live. And I asked him which part of the trade does he want to see live, and he said all of them. So coming back to the importance of timing, high and low of the day, and levels. The importance is understanding that if we go back, we can look at any instrument. Every instrument behaves the same in the timing window at round numbers or at quarter levels at the high or low of the session. And you're either in a continuation move, which means that consolidation or chop in a 3-hour window, you may be trading in a trading range in the middle of a move, or you may be in an existing trend inside of a high and low. That can be in any session, or you may be at the high or low of the day. So as we talked about, there are only 3 things that markets do. They break out and they trend, they break out, they fail, and they reverse. Or they trade back and forth inside in a trading range. And that trading range itself can be in the middle of a move from one side of the week to the other, from one side of the day to the other, or perhaps even from one side of the month to the other, especially at the beginning of a month in a new week and within that new month. So if you tile that together, timings, all of this makes sense, even if it's for a 25 pip trade or a 100 pip trade or a 50 pip trade, a session scalp, a 25 pip scalp, a 100 pip trend trade, whatever that may be. So yesterday we saw some massive moves on gold, oil. We saw great trades on the yen crosses. We saw trades later in the session on some of the major pairs. Canadian dollar had a massive move, day 3 reversal back to the high of the previous week. So their opportunities are everywhere. And coming back to something that I really want you to grasp, and that is to master setups, because the problem is that traders would still go into a session chasing price action and then get frustrated because they either get in too early and get stopped out, they get in the wrong direction and get stopped out, they get frustrated, and then they see somebody else post a trade that's over in 30 minutes and they take 50 pips. And they say, well, how can that be? Coming back to understanding high and low, the timings. Something as simple as even understanding 1 hour in one direction, 1 hour in the other direction. And then the patterns, the templates, the trade setups. If they go vertical for 15 minutes into a high, that's the beginning of the pump. If they go down 15 minutes into a low at the low of the day, that's the beginning of the dump. We'll look at 2 specific examples. I've already listed trades. I mean, yesterday all you had to do was get in anywhere for the most part in the Asian or London session in many of the pairs, and you even if you did everything wrong, would have still made money. So I talk about don't counter trend a day 1 runner. I repeat, don't counter trend a day 1 runner. Now that doesn't mean that at the low of the day after a 300 pip move, there might not be a trade. But I'm trying to emphasize again the day 1, day 2, day 3 as the week progresses. You have a higher probability of success on reversal trades at the low or high of the week on day 2, day 3. So I repeat, don't counter trend a day 1 runner. Coming back to timings, levels, and high and low of the day. We have a new day on gold. Just ignoring everything else. I said, and I repeat this, for all the hindsight naysayers, I repeat, the first hour will often make a high and a low. Unless you are outside of the high and the low in the first hour, I let the first hour make a high and a low. Now also observe that first hour is actually in a 25 pip box. That's the consolidation. So instead of you trying to trade these little swings and get the high and get the low, observe that you're actually inside of a 25 pip box. I repeat, you are inside a 25 pip box. The first hour makes a high and it makes a low. That is the low and the high of the first hour. We are down at numbers. So this is forgetting. We're not at a previous day's high or low. If you're trading this session, we can only work from the high and low of the day so far. The first hour, I repeat, makes a high and a low. You are inside of a consolidation, a 25 pip box. The second hour opens up. We have talked about the importance of timing. I'm going to keep repeating these things over and over again, because when you start to see this, you will sit back and wait for the setup instead of going short here or long here. The new hour opens and they come down. 1 push, 2 pushes, 3 pushes into the low, and then 3 micro pushes. And at the beginning of the third 15-minute candle, at the bottom of the consolidation, at the low of this day. So for the people who are going to email me and say, yeah, but you weren't at the high or low of the day. If you're taking this trade, it's at the low of the current day. This is the low of the current day. So if it hasn't gone to the outside, especially after a large range day where they've already broken outside of a previous day's low and a weekly low, today, that's the dump and pump for the peak formation low reversal. People say, well, why didn't, and this is where shorts get caught. The trade is up now. They've gone into a short squeeze. You counter trend this, they're going to go right through you. So once that move starts, don't counter trend it. Because we could be in that move for 1 full hour or 2 full hours, 1, 2, 3. They're going back in the other direction. They've got shorts trapped down low. They're not coming back. Think about this. All these traders that shorted the market anywhere from over here, right? They come back into that and take off really quick. That's because they're not going to let any of these lower level shorts out of the market. If they do, that means they can get out without a loss or maybe even with a small profit. But again, repeating timings, high and low of the day, levels, and then setups. Low of the day opportunity, they'd already broken out yesterday. It's day 2. So initial balance. Monday, Tuesday, 80% of the time will form the high and low of the week. From that now, we have a reference point. They may work back up towards the high of Monday, or they may come back down into Tuesday's low. We're still in the day so far. This can still roll over and go back to yesterday's low. That was a large move. That large move may not typically reverse this fast. This may be a trap to get longs back in the market before rolling over, going back into the money on lower level shorts before rolling over and retesting the low of today as well as yesterday. So again, just emphasizing timings, high and low of the day, and levels. For those traders that have asked about indexes, I will say 2 things: high and low of the day and major quarter levels. High and low of the day, major quarter levels. Those are my reference points whenever I look at the indexes before I scale down into the US session on smaller time frame with the 100 pip boxes. So understand and look at this chart. Do you notice where this chart turns off of? High and lows and major quarter levels. So the high and lows will either become support resistance, and then heading into a session, you have potentially 2 areas now that the trades can come off of. So if it's a trend trade, as we saw last night, doesn't matter, index, NASDAQ, or S&P. US session, we've come off of 13.5. Now, I know not everybody's index will match up exactly with the same levels, but 13.5 right at the end of the hour. This bar right here, okay, this bar right here at the low is the last minute of the first hour. So there are opportunities everywhere. The previous day's high forms resistance into the New York Open. They trade back into the higher low made in that second hour. So there's an opportunity to buy low in a squeeze for trend traders in the first hour, heading into the second hour, just prior to the open. So this squeeze going vertical, parabolic move, is 1 minute before the New York Open. And these are 250 pip boxes, not to the previous day's high and low, but the quarter levels are 250 pip boxes. So again, your risk is probably 1/5 of the opportunity when you identify a best trade setup. So again, high and low, that's the low of the session. Timings, that's 1 minute before the second hour opens. This is right at the open of the New York equity markets, right here. Okay, this is for all you trend traders. I don't need a moving average on here to know that that's a moving average crossover here for a squeeze and a parabolic move. Some traders ask me, why don't you use moving averages? Well, basically because once you start to see the pattern of the trend, you understand what that looks like with the moving averages. The moving averages is just more information on the chart. So you can have setups that are trend trades with moving averages. If you're trading with the trend, it's obvious that the averages are already in favor of that direction. If you're doing some kind of crossover system, well, that's just different because I'm working at specific times looking for specific setups. Timings, high and low of the day, and levels. So again, just talking about indexes, this is a 15-minute chart, but again, you'll notice the major half number was support. S&P, same thing, end of the first hour, right at the beginning of the second hour, right at the half numbers. That's a 250 pip plus move vertical straight up to the previous day's high. So I'm not worried about calling this little gap and this liquidity hunt and all these little swings. I'm looking for simple, large range opportunities, timings, high and low levels. Get in. If it's a scalable setup, add size. Lock it in. If it's going parabolic, be positioned with size, because when you get a parabolic trade, that's how you make a lot of money. Whether that's day 2 trend trade, whether it's a continuation in a session on a parabolic move. But you'll notice, for the people who keep telling me you can't just work 1 hour a day, well, I'm going to tell you, if you're working more than 1 hour a day, outside of in one session, you're working way too hard, and you're probably doing all kinds of crazy things, and at the end of it, giving it all back if you're making anything. So keep it simple, lock the money in, get off the screen. Sorry for the sarcasm, but I want a repetition, hammer it home. Keep it simple. There's no guesswork. Timings, high and low of the day, setups, levels. Keep it simple. Lock in the money. Scale it up in size. Get off the screen, make your trading as low stress as possible, and just become a sniper of those setups. And once you see this, as many traders are messaging me, you see the opportunities, then you start to see the bigger setups, day 1, day 2, day 3, week 1, week 2, week 3, first red day, first green day, parabolic opportunities. There is a lot of opportunity to explode your trading account. Have a great day, traders. Appreciate all the feedback and comments. Make this your best day so far, and may the markets go with you.